All right. Hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPicks, and this is our midweek options update. What I want to do is walk you through where we stand going into the second half of this week, walk you through what's happened so far, what are we seeing as far as support and resistance levels. We'll also talk about our overnight pop trade that we closed out this morning, and then finally take a look at two potential new trades that are on our radar for the end of the week. It's that trades that are setting up for us here over the next couple of days. So let's start out by talking about the market big picture. When we take a look at this daily chart of SPY, this is where I always like to start, as it really gives us a good glimpse into current conditions. It helps guide me on how aggressive or conservative I want to be. If we take a look at the last number of weeks, we have seen some pretty noisy conditions. We've had some decent moves in both directions. We just haven't had a lot of the clean follow through that we saw last year, where we saw moves continue into day 3, 4, 5, 6. We're seeing a lot of back and forth movement, a really good intraday range, just not getting those trending type moves to develop. So we can work with this type of environment. We certainly can. There's things that we can do, but there's some adjustments that we have made on our side. I've been trading a lot of credit spreads here of late because they're more forgiving. They tie up less capital. They give you 5 ways of making money on the trade. They just allow you to navigate through some of the noise in a safer way. The long calls and long puts that I have taken here lately, which I certainly have, especially the ones over the past week to 10 days, I have been very quick to book profit when we have it, because this market has been so back and forth. You go back into yesterday's session, you can take a look. I might zoom in here so it's easier to see. So you can take a look. We tested the 20-period moving average again, and it looked like that level was ready to break. Looked like we were going to get some further follow through to the downside. Fast forward here 24 hours, and you've got the S&P up 14. You've got the Dow up 250. We just continue to get this back and forth movement. The trouble there is these moves are big enough to where if you're not careful, it's really easy to get stopped out quickly or let those winners turn into losers very quickly. When we get into a trending type market, where we get those follow-through moves for multiple days at a time, that's when we can hold the positions longer and target the bigger winners. If we take a look at a trade on Lyft, those of you that are part of our NASDAQ Superstars program, it was a trade that we put on here this week. And Lyft, what we did is we came in and we bought the long puts. We did this on Monday afternoon. We put on multiple contracts. And what I did here yesterday is I closed out of half of the position. Now, I got questions from people on that, because we closed out of the position. It was around a 64% return on our capital. It was doing great for us. So why close out of the position? Why not just hold the trade and look to see if we can get some further follow through to the downside? The reason I did not want to hold the entire position, again, like I mentioned, this market has been all over the map. Right? It can reverse in the blink of an eye. And I wasn't willing to let that 60% winner overnight turn into a loser. So what we did is we closed out of half of the position yesterday, booked a 60+% return on half of the trade. And then we're carrying a very small position just to see, are we going to finally get this market to break to the downside? So that's one of the ways that we can also navigate through some of the noisy conditions that we're seeing right now. So on SPY, where does that leave us? If we take a look at the past week, we have basically seen price action pinned between 390 and 395. Right? This 390 level has acted as support now for basically the last 4 days in a row. That is the level that we need to break on the downside on a closing basis if we're going to get another leg to the downside. On the upside, there's a couple levels that I am keeping a close eye on. 398.12, that's the all-time high from back on the 17th. That's the next level. Should we break to the upside, that's the next level that would pique my interest for a potential resistance point. And then above that, we've got 400. Everybody's still waiting for that 400 level to be hit. What am I expecting here over the next couple of days? Well, looking at price action, it could go either way. I mean, this is the coiled spring pattern that we've talked about previously. We know SPY, especially over the past 12 months, has not liked to stay quiet for very long. We know out of this sideways move from the last week, we're going to get a very tradable move. What I'd want to see is either 395 to break on the upside, or I'd want to see us break down through 388.50. If one of those levels breaks, that would give me more insight into which direction we're heading. Right now, it's just it's a guessing game because price action has been so choppy here over the past 4 days. So those are some levels that we'll keep a close eye on. If we're going to break to the upside, there's a couple of levels that we need to see kick it in. If you take a look at the NASDAQ, continues to be very, very weak, down another 75 points here today. And that's well off the lows of the session. Apple continues to be one of the weaker names in the NASDAQ. Amazing to even say that because Apple historically has been a really nice market leader. It's down another $1 today, just over $1. If we're going to get this market to break out to the all-time highs and get up to 400, we need to see Apple bounce. Need to see Apple higher. Just not getting any signs of that yet. If Apple remains weak, look for the NASDAQ to potentially drag the market lower. Right? The volume, good, not great. We've got 50 million shares that have traded so far today with 2 hours to go in the session. So, are we going to get back up to, 80 million shares or higher? Probably. But it's not the overwhelming volume. And I think that's what's playing into some of the choppiness here. We're not getting volume to confirm any of these moves back and forth. I'd like to see this volume spike up above 100 million shares on any type of a break higher or lower here. The ATR is still trending down. We talked about this last week. The average true range just gives us an idea of how active the markets are intraday. I want to see that level stay above 5. It is still above 5. It's at 5.37 here currently. While it's trending down, it's still active. I want to see that number reverse back higher. I'd like to see it curve back to the upside, get back closer to 6. That would open things up a little bit for us. So I'd like to see that play out. And if that's going to happen, we're most likely going to need some selling pressure. All right. So what we did yesterday afternoon, we came in and we put on an overnight pop trade. This is a setup that has been extremely good to us here so far this year. We have had 20 winning trades in a row. It's been doing phenomenal for us, right? Well, we put on another trade yesterday afternoon because SPY does have those Monday, Wednesday, Friday expirations. We put on a trade yesterday during the last 30 minutes of the session, looking to close it out this morning, the morning of expiration day. And because this market was breaking down yesterday afternoon, everything looked weak. Price action looked like we were finally going to get some follow through on the downside. We came in and we sold it out of the money call spread. We were utilizing the March 24 options, the options that expire today. We came in and we sold the 391, 393 call spread. All that means is I'm selling the 391 call. I'm buying the 393 call at the same time. We put this trade on yesterday for, get my fill price here. The trade was initiated yesterday for 52 cents. We collected $52 per spread. It tied up $148 of our capital per spread. That was my maximum loss in the trade. That's the most I was going to lose on the position. The only way that I was going to face that entire $142 loss is if I held all the way up to expiration. I was not willing to do that. Okay. I was going to close it out, ideally the first half of the day. So the goal was for SPY to stay below 391. You can see it's currently sitting at 391.12. We're just above that 391 level. However, on the high today, we did get up almost to 393. So what I ended up doing on this trade, you can see it's currently trading for 61 cents. I closed it out earlier today for 68 cents. And I had some questions from people asking, why did I close it out? There's a couple things that I look at intraday. Let me go ahead and pull up a 5-minute chart. It's one of the charts that I track throughout the day just to see what's happening. And there's a couple things to point out. I've got a couple of indicators on this chart. We've got our just a very standard pivot point indicator. Those are the horizontal dotted lines. And then we've got the blue line. That's the VWAP, or the volume weighted average price. That price action's oftentimes drawn towards that level. It acts as a magnet in many cases. So we open up this morning. Open up higher. The first 20 minutes of the session, we did see the market continue its move to the upside after a pretty significant gap to the upside. But then we did get some selling. Okay, between 9:45 and 10:30, we did get the market to start pulling back. We actually got down to a low right here of around 390. So it looked great. I mean, it looked like it was going to recover for us. It looked like we were going to start to see price action move in our favor. There's a couple things that we have to keep in mind. We know that when markets try to sell off mid-morning, Oftentimes you get into that mid-morning reversal around 10:30 or even 11. And oftentimes markets will find support in reverse. We know that every dip has been bought. It's been very difficult to get any follow through on the downside. So when we got this move lower, we were wrong right off the bat this morning, right? I mean, we were looking for a move lower this morning. We didn't get that. The market opened higher, and at least for the first 20 minutes of the session, it continued to move higher. So once we got this pullback mid-morning, with the overnight pot trades, we do not have the ability to stay patient. We can't hold these trades all day long. These options are going to be very active, very sensitive to movement in stock price, very sensitive to movement in theta and the time decay. So what I did is I took advantage of this sell-off right here. And I said, okay, we were not right on the trade. We did not get the move to the downside that we were ideally looking for this morning. So when we closed it out, I wanted to take the partial loss. I wanted to limit the damage on a trade that moved against us. We were dead wrong on direction. And because we know that the market has seen all of the dips bought, I did not want to see this thing rally right back to the upside, rally all day long. How many times have we seen that over the past few months? Rally all day long and then take a full loss. If I can keep those losses small, that's going to allow me to battle back much quicker. We're coming off of 20 winners in a row. If I can keep that loss small, that loss is just a small little blip on the radar. It was a $16 loss, not about a 10% loss per spread. So it's going to go down in the books as a losing trade, right? It breaks our winning streak, but learning how to take a loss, sometimes it's the most difficult thing to do as a trader. So had I held, in theory, I could have held. And here we are going into the afternoon, SPY sitting right on top of 391. We needed it to close below 391. I could have held, still had a chance to book a profit on the trade, but it's so risky because it could have very well gone the other way, rallied right back to the upside, and I would have taken, instead of taking a 10% loss, I could have taken an 80, 90 full loss. I wasn't willing to take that risk. So we want to take that, take those trades ideally off as soon as possible. In a lot of cases, we're going to be able to do that in the first 90 minutes of the session, good or bad. In this case today, we ended up taking the partial loss. So really nice winning streak comes to an end. We'll pick it back up here Thursday afternoon into Friday expiration, see if we can get one, maybe two new trades on, see if we can start a new winning streak here later in the week. So that was how we managed the trade on SPY. Wanted to talk through another trade that we close out as part of our NASDAQ service. This is a trade that we put on last week. And let me pull it up. It was on YETI. And we came in and we sold an out of the money call spread utilizing the April 16 options. We sold the 77.5 80 call spread, selling the 77.5 call, buying the 80 call at the same time. The goal of this trade was to get a move below 77.5. Well, that's exactly what happened. I mean, YETI's down another almost 4% today. We sold this spread originally for 71 cents. We collected $71 per spread. It tied up $179 of our capital to put the trade on. So a very reasonable trade. It wasn't tying up a ton of capital. It gave us 5 ways of making money on the position. All I needed was for YETI to stay below 77.5. I didn't care if it moved up, down, or sideways. As long as it stayed below 77.5, I was okay directionally. I also made money from time decay adding up and from volatility decreasing. Now, with the move lower today, we ended up closing this trade out for 24 cents earlier. And I had some questions from people asking, why did we close the trade out? Well, we were between 50 and 75% of our max profit. The max profit was the 71 cents that I collected to put the trade on. When I start to see a profit like this, where we can close it out, take between 50 and 75% of that max profit, I'm going to look to do so. And especially in this market, like I've talked about a few times already today, with this market so sensitive to every little headline, it's just, there's so much back and forth. I didn't want to let this thing turn back around, give back all that profit, and let this thing run back to the upside. How many dips have been bought, right? We've got all this stimulus. Now they're talking about an infrastructure plan, a lot of money being thrown at this market. We've got to be cautious on how much we look for on the downside. So I close it out, again, 24 cents per spread. It's now trading for 19 cents, so it still can be closed out for a nice profit. If we take a look, if I would have held, I could have held for the next 23 days. Right? So that's 23 days left to expiration. There's an additional 19 cents of profit potential. So what you have to ask yourself, is that additional 19 cents of profit potential worth keeping the risk. We still have the full risk on the trade. Is it worth it to book the additional 25% of our max profit? For me personally, I would rather take the trade off, free up the capital for the next trade. I have found better success taking those partial profits. That's the way I don't have to sweat it out waiting to expiration. Because if we get a bounce to the upside, this thing could very well go from a nice profit to a losing position. I wasn't willing to take that risk. So again, just reacting to market conditions, reacting to the back and forth movement, we ended up taking the partial profit. It gave us a $47 profit per spread. It's a 26% return on our capital in less than 6 days. Anytime that you can tell me I can book a 26% return on my capital in a matter of 5-6 days, absolutely, we love that, especially given that we had 5 ways of making money on the trade. Very high probability of success on the trade. So we closed out of the YETI position here today. Let's take a look at a couple of new potential trades that are on our radar for the rest of the week. Let's start with PayPal. This is symbol PYPL. This is a 195-minute chart. The indicator that we're going to talk about here currently is the pulse indicator. It's the red and yellow histogram down towards the bottom of the chart, and it is currently plotting yellow. In fact, the last 5 bars have plotted yellow. What that indicates is prices between a 1 and a 2 standard deviation move on the downside. In other words, we're oversold. Only 13.6% of all occurrences will fall outside of this range on the downside. Doesn't mean it's not possible, just means it's not probable. The odds will favor either a period of consolidation or a reversal in the other direction. Look what's happened to price since those yellow bars started plotting again. See how price action has just started to move sideways here right around 240? Very typical pattern. Doesn't mean we're going to see a significant bounce higher up back to the all-time highs. But this is a very typical pattern that will play out. We already know the NASDAQ's overdone. The NASDAQ's been lagging behind. We could very well see a continued game of rotation here, where the NASDAQ starts to take a leadership spot, and then you start to see the Dow and the S&P sell off again. We'll just have to wait and see what happens here. But when I see this pattern, I would like to put on a neutral to bullish position, a trade that would benefit from a sideways consolidation or a reversal in the other direction. So here's what that looks like. Let's jump over to the trade page. Let me switch the symbol from YETI to PayPal. I have been trading a lot of the April monthly options. Those are the ones that have 23 days left. I typically look for between 20 and 40 days. 20 to 40 days before expiration is typically the sweet spot that I look for when opening these positions. I'm going to come to the out of the money puts. The put options are on the right-hand side. I'm going to go to the out of the money puts, and let's go to the 230 puts. I highlighted that strike because they have around a 64% chance of closing out of the money. You can see that number right here in that probability out of the money column. I typically like to look for around a 65% chance of closing out of the money on the options that I'm selling. That's always my starting point. So I'm going to right-click on those 230 puts. Let's go to sell, and let's go to vertical. That is going to pop up in order down at the bottom, where I am selling the 230 put, buying the 227 put at the same time. So the goal here is to collect between 30 and 40% of the width of the strikes. There's a $2.50 difference between the strikes. If I can collect between 75 cents and $1, this trade would be of interest to me. Right now it's trading for 75 cents mid-price. Why am I looking to collect between 30 and 40% of the width of the strikes? If I click on confirm and send, look what it does to my risk reward ratio. I'd be risking $175 to make 75. And between risk 2 and 3 to make 1. I am okay with that ratio. I can make those numbers work. If I start to go farther out of the money, let's say I can only collect 40 cents. That one doesn't make sense because now all of a sudden I'm risking 4, 5, 6 to make 1. I can't make those numbers work in our favor. So this one does meet our criteria as long as I can get filled at 75 cents or higher. Now, I have 5 ways of making money on the position. My break-even point, as you can see in the order confirmation box, is at $229.25. I make money on this trade as long as price stays above $229.25. Current price is around $239. We have almost a $10 cushion where PayPal could continue to move to the downside, and I'd still be okay. Now, I'm not expecting to move lower because, again, we're already between a 1 and a 2 standard deviation move on the downside. Only 13.6% of all occurrences fall outside of this range. I'm expecting price to either chop sideways and move higher. So if up, down, or sideways does not matter to me as long as price stays above 229.25. We also make money from time decay adding up and from volatility decreasing. So those are the 5 ways that we have of profiting on this trade. The ideal scenario is for price to rally higher. That's how we would make money the fastest. If we just sit here and chop sideways, it's still okay. We're just gonna have to hold the trade longer and let that time decay work in our favor. Okay, so this is a neutral to bullish position that's on my radar for PayPal. As I've talked about in previous sessions, everything I just talked through holds true. I mean, everything is valid about this trade. I just don't like to place these trades until the last 30 to 60 minutes of the session for a few reasons. Number one, it allows me to see, do we get any head fakes intraday? Do we see any false moves, any reversals intraday? And then more importantly, I can take advantage of the bigger volume that we typically see around the last 30 to 60 minutes of the session. That makes it easier for me to get fills on trades. So I would revisit this trade here around 3:30 just to see, is it still there? Can I still get filled? See if we can go ahead and execute the trade on PayPal. The second trade that I was looking at was on AMD. This is Advanced Micro Devices. Along with a lot of the other tech names, this one is oversold. Just like PayPal, we are starting to see yellow bars on the pulse indicator, indicating that we're near an extreme on the downside. We're between a 1 and a 2 standard deviation move on the downside. It does not mean AMD cannot continue to head lower. It's still possible. It's just not probable because only 13.6% of all occurrences fall outside of this range on the downside. Odds favor either a choppy stretch or a reversal back to the upside. Doesn't have to be a huge reversal. Just like we talked about on PayPal, if we just chop sideways, there's things that I can do with that. So let's go back over to the trade page. Just like PayPal, let's switch the symbol to AMD. Let's stick with the April monthly options with 23 days left. And let's go to the 75 puts. They're about $3 out of the money. I selected the 75 puts there because they have a 65% chance of closing out of the money. I'm going to right click on those, go to sell, and go to vertical. That is going to pop up an order down at the bottom. By default, it has me selling the 75 put and buying the 74.5 put. I'm going to switch the 74.5 put. I'm going to switch it. Let's go to the 73. Let's see what that does to us. I can collect around, well, it's trading for 54, 55 cents, kind of bouncing back and forth. Let's say I get filled at 55 cents. I'd be right around risk 3 to make 1, slightly better than that. I'm okay with that ratio. As long as I can stay between risk 2 and 3 to make 1, I am okay with that. The reason I'm okay with it is I've got 5 ways of making money on the position. I make money if the stock moves up, down, or sideways, doesn't matter, as long as price stays above 74.45. Price is already oversold. We already talked about that. Not expecting price to move lower, but if it does, I am okay all the way down to 74.45. Gives me about a $3.50 cushion that the stock could continue to move lower, and I'm okay. Any type of a move to the upside, even if it's just a tiny move, slow move to the upside, I can work with that. Up, down, or sideways doesn't matter as long as price is above 74.45. I also make money from time decay adding up, income from volatility decreasing. So those are the 5 ways that I have of making money on the position. So again, just like PayPal, the ideal scenario here is for the NASDAQ to find some support and start to bounce higher. That would help these trades make money the fastest. If they don't, if we just continue to chop sideways, kind of bounce back and forth, we're okay. We can still make money from the time decay adding up. Now, the reason I love these types of trades is, let's say we're dead wrong. Even though only 13.6% of all occurrences fall outside of this range on the downside, let's say it happens. And let's say the market falls out of bed. The most I can lose on this trade here is $145. The only way the only way I take that full loss is if I hold all the way up to expiration over the next 23 days. Anytime before then, I can go ahead and close it out for a partial loss if I need to. Okay, so that's another trade on AMD. I'm continuing to lean heavily on the credit spreads here this week. I'm not opposed to the long calls and long puts, but I would like to see a little bit more clarity out of price here instead of just this noisy back and forth. If we can start to see things break out going into the end of the week, we could shift our focus and take a look at some additional long calls and long puts at that point. Rich, you exited the pot trade at 45 cents. So that should have been a tiny profit. Well done if that's a profit for you. Should have been, or pretty close to it, depending on your fill price yesterday. So yeah, I mean, it's been a tricky market, no doubt. I mean, hindsight, it's always difficult to battle that hindsight issue as a trader, right? Because hindsight's always 2020. Well, had we held, we would have been sitting okay, right? We would have been able to take a profit out of the trade. It's just the trouble with that is we've seen so many cases here where the market tries to sell off early, the dip is bought, and we head right back to the upside and close near the highs of the day. So you just not opposed to holding. You know, if that's what you did, that's fine. We just want to be cautious with it. We just don't want to take those 100% losses. Those are the ones that can be difficult to battle back from. And YETI, you were out at 25 cents. So nicely done there. That was a nice profit on YETI. So good work there. What is happening in the Dow Jones futures? Okay, so I'm not personally trading the futures. I trade, everything that I do is on the option side. Let me load up a chart here a second. So the tricky part about trading the Dow, even though I'm not trading the futures, I definitely look at the Dow. I like to look at DIA, the Dow Jones Industrial Average ETF. I mean, you can see that the Dow has been super strong. It's definitely been the strong index product here over the past couple of weeks. The tricky part about the Dow is it's only 30 stocks. It can be heavily influenced by a big directional move in just a couple of stocks. Today, you've got Boeing up. Okay, you've got it up a couple of bucks. You've got some of the financials higher. So you've got the Dow trying to hang in there. But when you take a look at the big picture, again, this is not /YM. This is not the futures market. This is the ETF. But when you take a look at this daily chart, we are sitting right on top of a very crucial level. That 8-period EMA is sitting right here, right on top of current price. If we break that level, we could very well see a further wave to the downside. I'd love to see it. Okay, I don't need the market to crash. I don't want the market to crash. I just want to see volume stay active. I want to see the range stay active. I want to have good markets to trade. And in order for us to continue seeing the good activity, we need to see some selling. We need to see the back and forth continue. If we get back up to all-time highs in the weeks to come, that's fine. But in the near term, really want to see some further selling on these overdone names. So the Dow and the S&P are trying to keep this market afloat here today, but they're well off of the highs. If we continue to sell off here into the close, pretty telling. We could very well see some further weakness market-wide going into the end of the week. So if you're trading the futures, Trade Addiction, if you're trading the futures, in my opinion, if you want to trade the index futures, I think there's better markets out there. I think the NASDAQ /NQ, the Russell /RTY, I think both of those are much better products to trade. The Dow, I'm not saying you shouldn't trade. You just want to be cautious. It doesn't have near the liquidity. I have found better success when I have traded futures in the past. I have found success trading the NASDAQ and the Russell. Those would be my preferred markets if I were day trading. And we can certainly see about having one of our day trading instructors jump on for one of these sessions here to show you how they've been trading on the future side. So I can certainly see about doing that for you guys. All right, so I'm going to start to wrap it up for today. If you have any questions on any other markets that I have not talked about here today, maybe trades that you have in progress, feel free to type those questions in. If you are reviewing the recording, feel free to post a comment on the video in Facebook or YouTube, or email me directly, mike@netpicks.com. Be more than willing to help out there. All right, so I'll jump back on Friday for our weekly recap. We'll take a look at where the markets wrapped up the week, see if we finally start to see some of those levels that we talked about today break on the upside or the downside, see if we can get some tradable moves here over the next few days. So I'll wrap it up here. Enjoy your afternoon, everybody, and I will talk to most of you, hopefully, on Friday. All right, we'll talk to you then.